Joining us for further analysis on those moves is Reko Nare from Anchor Capital. Reko, hi, good to chat to you once again. Looking at where we are post-Sona, now commodities are down. You've seen that. The Rand we've just spoken about as well. Is this Sona or is this global? Because something is going on.
All right, thanks so much for having me. It's great to be on the show. Hello to your viewers. I think as you open off the show, I think what we're seeing, Ray, is just broad risk off. And that's weighing on all sectors. And that's driven more by global markets and what we're seeing happening within the, specifically within the US tech sector, risk off filtering into Asian markets, and then of course filtering into our markets as well. So I'll probably say it's more global market driven than it is Sona driven. And you're seeing that within even our commodities. You know, commodities under pressure today. I think about platinum that was down 4% yesterday, gold that was down 2%, all of that just dragging resources lower. And I think all of it just screams, a weaker global risk appetite. You're seeing that even within our Rand that's trading, above 16 Rand to the dollar today.
Yeah, you definitely can see that. And then overnight, there was that tech sell-off. I mean, Apple at one point losing 5%. I think like 200 billion lost in one foul swoop. What's going on there? I mean, I thought tech was strong.
Yeah, right. So look, the concerns around return on invested capital within the tech players, that's been a question mark that sort of dominated markets. But sort of the thoughts was always that, as the big hyperscalers continue to build out their AI capacity, then it's worth, sort of paying the massive numbers that they've been paying. But I think what you're seeing investors once again just asking around that return on invested capital. So I think the risk off that we saw yesterday certainly was dominated by that. If I think about the Dow Jones down 1.3, the S&P down 1.6, and then the Nasdaq, which is of course the tech heavy complex within the US, down 2%. So all of that rates around software concerns, the AI names declining, big tech. We also saw that even filtering into the financial sector. But all of that just kind of under pressure on return on invested capital and capex concerns within US tech.
Yeah. Reko, let's stay with the US. We've got that inflation figure coming out later on as well. If that inflation is down, I think that opens the gates for a rate cut. What are you seeing? What are you expecting? Because this is going to impact on all of us.
Yeah, right. So look, if I think about, the latest print that we have sort of prior to this, it's of course the December CPI number that was stable, both at a headline level, at the core level, both prints showing, or both sides of the print showing no acceleration within inflation. And then for this print that we're going into today, of course, it's the January number. You're expected to see inflation cool modestly to go from 2.7 at a headline level to 2.5 at a headline level. And I think what it means, Ray, is that, if you do have a print that's in line, then of course that means that the Fed mid year cuts that the market is expecting. Of course, the market is expecting 2 cuts this year, one in sort of June, July, and then the other one at the end of the year. That essentially keeps that on the table. But if we do see any upward revision or any upward surprise, then I think that does bring the higher for longer concerns back on the table.
Yeah, of course, we've kept our repo rate unchanged at the last MPC meeting. But if that does happen, we could just see the knock-on effect for us. Maybe another 25 basis points, maybe even 75 this year.
Yeah, right. So look, our MPC continues to be hawkish. Look to the I want to say the concern, I guess, of a lot of market participants, seen as, we've seen our kind of rate picture continue to keep and can continue to stay where it currently is. But I think there's a lot of talk around, the fact that you've got that new inflation targeting that's, of course, kind of giving credence to that. And then, of course, you've got the fact that you've got a South African consumer that is certainly under pressure. That's very different from what we're seeing within the US. Within the US, if I think about the last GDP number that we had out of the US, a reacceleration, or rather a US print that was revised higher on the back of a stronger US consumer. So yeah. I think our problems are not the same, and I think we should see rates lower. I think the data would point to that.
Yeah. Something else, British American Tobacco Q4 results is interesting. They're closing up shop to a certain degree in South Africa. But what do you make from their Q4?
Yeah, right. So look, if I think about it at the headline level, revenue coming in 2.1%, adjusted profit 2.3%. You're seeing growth within the smokeless consumers. I think they rose by 4.7 million. So yeah, you're seeing strength there within the new categories that they've been rolling out. If I think about some of the patches of the business that continue to do well here, strength within the US part of the business, growth within their new Velo nicotine pouches, but certainly it is improving confidence within BAT's and British American Tobacco's long-term transition. But I think from our side, of course, we look at the valuation at a 12 times forward. It does look quite full at the moment.
Yeah. And then Cell C, I was watching their press conference this morning with an eagle eye, and they seem to have done very well since they've now listed. What do you make of it? But they seem to be on a really good trajectory.
Yeah, Ray, look, we would probably say it's still fairly too early to tell. It is a first half number, and it's, of course, their maiden trading statement that they released this morning. But I think when you look at the numbers, revenue up 1.8, that's pretty decent. Adjusted EBITDA, you opened up the show talking about that negative 1.1. Of course, a lot of one-offs there. But I think these results, I'd probably say, are very distorted as far as because you've got a lot of sort of restructuring and timing matters. And I don't think that fully reflects the new Cell C that we're expecting to come to market here. But I think as we've already highlighted, I think a fairly decent set of numbers, but we would be looking to the second half 2026 for a bit of a clearer picture around a clean performance baseline from the business.
Yeah. I mean, Reko, this is so interesting because, with Cell C, I must admit, I didn't expect those results today. And for me, it was a bit worrying because it's a very tough environment. You've got the other big two. But, this is a really good start. And they had their restructuring, didn't they?
Yeah, right. So I agree with you. Look, if you think about subscribers over this first half growing by 11% to 8.6 million, that's fairly strong, right? But as I said, look, you've got some strong or rather stable top line trends going on here. You've got some strong revenue filtering through, but I think we'll look to that second half for a bit of a clearer picture, or rather full year set of numbers to give us a fuller picture around what this business looks like post its listing.
Yeah. Right, time for your stock pick then. What are you hanging your hat on at this hour?
Yeah, right. So I'm going to hang my hat on Boxer. That business continues to deliver strong volume-led growth. If I think about the fact that it's delivering sales growth of about 12%, despite sort of the deflation that you're seeing within some of the categories of the consumer staple segment within South Africa, it's certainly been the one that's been releasing the strongest trading statements. And then you've got strong store rollout. You've got momentum into year-end last year, which I think are some of the key drivers for that business. And finally, from a valuation perspective, trading at a 19 times forward PE while growing at these levels, I think that valuation is very reasonable. So it's a high quality business, a high growth retailer within SA. So that's Boxer on the JSE.
Yeah, I love it. Boxer is a strong one. Reko, thank you so much. Good to have you on Business Lunch this Friday. Thank you for joining us. That was Reko Nare from Anchor Capital.